Morning. Sorry, afternoon. Assalamualaikum.
Waalaikumsalam, sir.
Waalaikumsalam, sir. Good afternoon.
How you all sound so sleepy? Tired ka? Staying at home.
It's gloomy, sir.
It's what? Lunchtime?
Gloomy weather, sir.
Oh yeah, I know. Everything is gloomy. Weather, environment, COVID cases not decreasing. Yeah. Maybe next year pun masih online. Okay, there's 30 plus of you. So, as I mentioned my WhatsApp, I think all my lectures will be quite short. I think if it's too long also, it will be a bit too boring because a lot of my lectures are just the key issues and key matters from each of the chapters. And then the working examples is just for you to go through yourself now. So you can work through the examples, which is quite, hopefully easy to follow. I think as I mentioned with taxation, it's all about the format, the pro forma. But for you, it's just an academic exercise. Yeah, because you don't really need it to understand it fully for the purpose of your module this year. Yeah, but I think it's still useful to be able to look at the pro forma, the format, to see how tax is computed, just in case you decide to do the advanced taxation at the professional level. Yeah, so at least you have some foundation. Because I think if you don't go through the textbook and you just do your assignment based on essay, if you to do the professional level of taxation, you will struggle badly. Yeah? So I think it's useful just to go through for your own benefit more than anything else. I don't have many slides. If you take the front, the back, preamble, there's only probably 10 slides here. But for me, I have a habit that even though there's not many slides, I can still talk a lot anyway. So basically, what I want to cover today is just scope of tax, what taxation is all about, computing taxable income, types of income, tax exempted income, and personal allowances. Hopefully you have the textbook in front of you, so it's quite you can follow through the textbook. But who are subjected to tax? Basically, and just like in Brunei, if you look at the income tax order, chapter 35, you will look at issues of tax residency, yeah? Who's subjected to tax and who's not subject to tax in Brunei and also in the UK. We follow the similar residency rules in the UK. As long as you stayed in the country for more than 183 days, you're considered as being resident in that country. Yeah, so then you're subjected to local income tax. When I left my London office, when in May, I calculated the day of my departure from London to make sure that apart from being less than 183 days, my salary is at the point where I can utilize my full personal allowance, that I can get a tax rebate from the tax I paid in advance. So in Brunei, this is a similar concept. Yeah. So if you're a UK resident, you're taxed on your worldwide income. That means if I get my salary in the UK, I receive some allowance in Brunei, I receive some other income from other countries, it is considered as my worldwide income. Yeah, so I'll be assessed as though the income has been received in the UK. Yeah, so in general, all UK residents liable to UK income tax, and their UK and overseas income, and a non-UK resident be liable to UK income tax on the worldwide income. So if you're non-UK resident, then you're taxed as though on a remittance basis. What does a remittance basis means? That, for example, I'm still considered as a, for tax purposes, I'm still considered as a UK tax resident because I'm British by birth. But for tax purposes, because I'm not resident in the UK, I do not live in the UK. So for tax purposes, I'm considered as non-resident. But any money that I remit to the UK above a certain amount will be considered as taxable in the UK. Yeah, so non-UK residents is liable to UK income tax only on income arising in the UK. So in my case, if I have dividend income, if I have non-savings, savings income in the UK, they will be subjected to tax, but all my salary in Brunei will not be subjected to tax. So if you introduce personal income tax in Brunei, then obviously you need to look at residency. Am I a resident for tax purposes? So actually, when you look at the change in the pension law, you know that the pension tour for 60-year-olds, yeah, if you are 60 and above, you get $250 in your house. And they changed the law with effect from 1st October. You're only entitled to 250 if you're a citizen and stateless. So in other words, if you're a red IC but a citizen of another country, you're not entitled to the $250 because the government view that there are a lot of people who have, they live in another part, they live in Malaysia, for example, then they come back every month just to collect the $250, then they go back to Malaysia. Yeah. So they feel that there's an abuse of the pension system. So similarly, you know, probably if they come up with a personal income tax system, they may have some sort of definition, maybe along those lines. Yeah. So if you have personal income tax in Brunei, then you need to look at residency. Because what you want to do is you don't want someone to say that, hey, no, I'm not resident in Brunei, I don't want to pay tax. Yeah. So how do you find out about residency? You look at the passport. Inside out, look at the immigration report. Now with data analytics, you can actually know people's movement. How many days you've stayed in Brunei, how many days you've been outside Brunei. Yeah, if you have stayed in Brunei more than 183 days, then you're considered as a tax resident. Yeah, so of course, for now, with no personal income tax, it does not matter whether you're in or out. But should personal income tax be imposed in Brunei, then it is important that we have a system to be able to monitor people's movements and to ensure that when the people say they are not residents, they are really not resident. Yeah? So the only way to check is to look at their passport as to how many times they spend in, how many days they spend in Brunei, and how many days they spend outside Brunei. You may have offshore workers who work 1 month on, 1 month off. So they're 1 month offshore, 1 month back in their country in residence. So you need to look at issues like that. How do you tackle this kind of issues in terms of are they subjected to tax or not? Yeah. So an individual is treated as a UK resident if the individual has spent 183 days or more in the UK during that year. Yeah. Likewise, has a home in the UK and no home overseas. So if you only have a home in the UK, you don't have a home outside the UK, you're considered as UK tax resident for tax purposes. Yeah. And the most important thing is the person works full-time in the UK during the tax year. And if a person works full-time, obviously you get a paycheck, a salary, you have a contract of employment with a UK company. Yeah. And usually if it's not a pay-as-you-earn system, you do your own self-assessment, then it is very important for the tax department that when you make your tax returns, that they do check that you have a proper employment contract, that you're actually a resident in the UK, and that you have a property in the UK. Yeah. Now, if you just look at page 22 first. If you have your tax book in front of you, computing taxable income. Now, in the personal income tax computation for each year, the income is split into different sources of income. Yeah. Now, of course, you can read it on the PowerPoint, but the most important thing is just look at the Richard's income tax computation that you have in front of you. So you have on the left side the sources of income. On the top, the headings, where it's non-savings income, savings income, or dividends in total. Yeah, and then you just go through to come to your taxable income. Now, for personal income tax, there will be three sources of revenue, three sources of income. Yeah, one is non-savings income. What is non-savings income? Which is your trading income from your business, employment income, pension, property business income. So those are non-savings income, yeah, because they're incomes derived from something that you have not saved. And in any normal income tax computation, the major figure would be your employment income. Yeah, so in Brunei, the majority of people here would be assessed under their non-savings income, which is income from employment. The other source of income will be savings income. So savings income is if you have extra money, you have savings, you put it into fixed deposit, you put it into, in the UK, called a building society or other interest-bearing investments. Yeah, so the interest income that you receive is considered as savings income. The third source of income will be dividend income. What is dividend income? This is income from ownership of shares held in a company. Yeah. So as I mentioned, if you have, say, shares in BIBD, at the end of the year, BIBD announce a dividend. The dividend that you receive will be your dividend income. Yeah. So you only receive dividends from shareholding. Yeah. That's the only source of dividends. Of course, in Islamic banking, they use the word dividends instead of the word interest. But in the UK, any income or any interest you earn from your banks, from your savings deposit, your fixed deposit, will be considered as savings income. Yeah. So dividend income is purely for the purposes of dividends that you receive from shares that you hold in a company. Okay. So in the UK, the tax year or fiscal year or year of assessment runs from 6th of April to 5th of April. Why such a funny date? That is because that's the date when the budget was presented years and years ago, more than 100 years ago. So traditionally, they just decided to make the tax year running from 6th of April to 5th of April. Yeah. So for example, the tax year for 2020 to 2021 will run from 6th of April 2020 to 5th of April 2021. But when you actually look at normal tax computation, which is submitted to the tax department, they just use the nearest whole month, which is end of March. Yeah. Okay. So when you look at the tax tables here on page 22, you can see the headings. Yeah. You got your non-savings, your savings income, your dividend income, and then the rest of the information just flows below. Now let's see. Wait a minute, where is it? So I have tried to attempt to do a pro forma. What are the components of computing your taxable income, which is the following page. Yeah. So let's go through one by one slowly. If you were to do an exam, this is how the table will look like. Yeah, this is how your pro forma will look like. This is how a general tax computation will look like for personal income tax. And straight away, when you do all these tax examples, you have your heading straight away. You know, non-savings income, savings income, dividend income, total. Yeah. So let's look on the left side. You have trading income. As I mentioned, trading income, income from your business, that is non-savings income. Employment income, which is salaries, payroll, whatever you receive as being a contract employee, it's non-savings income. Then pension income, income that you receive from your pension, yeah? So that is non-savings income. Property and business income is a rental that you receive, which I'll cover next week. So when you rent property now, you receive rental income. That is considered in the UK as being part of your non-savings income. At the next down, you have your bank interest or building society interest. If you don't know what building society is in the UK, building society is like Halifax and all these companies. All they do is they make lending for mortgages for you to buy properties. Yeah? That's why it's called building society. So they provide financing to individuals purely for buying properties. Yeah? Well, commonly known as mortgages. Then you have other interest income, I'll explain later, then dividend income. Then you have what is known as your total income. Once you have already calculated your total income, you have what is known as maybe qualifying interest income, where you borrowed money for the purposes of the business and for certain purposes. Yeah, so that's considered as a deductible deduction. Then you have your net income. Then once you've calculated your net income in the UK, because there is a cost of living, you need money to live and all that, you get what is known as an annual personal allowance. Yeah, even in the Brunei tax law, there is provision for personal allowance. Then you come to what is known as your taxable income. So that is the basic. Now, usually in exam questions, you don't stop at taxable income. You know, you probably asked to calculate what is the income tax liability or what's the income tax payable. Yeah. So go back to page 22 again. You can see the taxable. Yeah, you have taxable income stated below. Then the calculation of your income tax. And you start from the left to the right. Once you've done some examples, you will know how to use the taxation tables. Yeah. So I don't know whether you have your tax tables in front of you, but just for this example, his non-savings income is 37,650. If you're lost, shout. Yeah. 37650. Okay. If you look at the tax table, up to 34,500, the tax rate is 20%. Okay. Anything in excess of that, you go to the next tax rate, which is the higher tax rate of 40%. Yeah. So that's how you get the 40%. The 3150 is in excess of 34,500, and that is taxed at 40%. So you get all these rates from the tax table. If you don't understand, it doesn't matter. But once you've done a few examples, which is what I recommend that you do in the textbook, you'll be able to follow how to use the tax table. So I think when the textbook was photocopied, I asked for the tax tables to be done separately. So what you do when you go through the examples, have it by your side, yeah? Then you look at personal income tax, you look at the tax tables, okay, what are the applicable rates and so on. Since you're not doing exams, but the problem, a lot of the common problems that students have in exams is one of two things. One is using the wrong tax rate, and one is looking at the wrong column. So if you look at your tax table on page 493, you have income tax. Okay, you can see basic rate, higher rate, additional rate. And then you look at the right, there's normal rate of 20%, 40%, 45%. And then there's dividend rates, 7.5%, 32.5%, 38%. So some of the common problems that students that I have noticed in exams is, for dividends, they do not use the dividend rates column. Yeah, they use the normal rates column. Okay. If you're confused, don't worry, because there are sufficient examples in the textbook for you to be able to see how the tax tables work. But since this is an assignment based, even if you don't fully understand, it doesn't matter. Yeah. But of course, if we had exams, then I will do every example line by line, so that you can easily understand not only how to calculate taxable income, but also then how to calculate what the tax liabilities and the tax payable. Yeah, I mean, in exams I can trick you a little bit. Sometimes people don't ask. Sometimes the question may ask for tax liability. Sometimes they may ask for tax payable. So there's a difference between what is payable and what is your liability. Because under the pay-as-you-earn system, under the non-savings income column, you may already have your tax deducted. Yeah. So when you calculate the tax liability, you deduct your pay-as-you-earn, what has already been deducted, and that is your tax payable. Okay. So this table here, components of a detailed tax computation, is something that would have to be engraved in your mind. Yeah. This is the pro forma that is fixed. It doesn't change, and the pro forma is set in such a way that when you submit tax computations to the authorities in the UK, this is a similar format that you will be using. Okay, so what are tax exempted income? Because sometimes in the UK, yes, you may receive income, but there are certain schemes, certain investments where you have exemption from tax. Yeah. So income from certain investments, such as those held in individual savings incomes, are exempted from income tax. ISAs are tax-efficient savings accounts. This can be either in cash or stocks and shares ISA, and this will be listed by the tax authorities. Yeah. Now, dividends income and interest received from ISAs. So if you're invested in some of these individual savings accounts and investments, any dividend income or interest is exempted from income tax. Yeah. Similarly, capital gains made for ISAs are also exempted from capital gains. So the uniqueness of this special individual savings account is, if you invest in this investment, if you have extra money, you invest in this, your income will not be included in the savings income column, yeah, for tax purposes, and the dividend income they receive on the investment is not included as part of your dividend income. So savings certificates issued by the National Savings Investments are fixed rate or index linked. So if you go to UK, you have these premium bonds, national savings bonds, national savings investment certificates. These are usually for a fixed period of 2 to 5 years, and you earn certain I think interest every year, and on maturity the profit is also tax exempt. So when you hold the premium bonds for 2 to 5 years, when you sell it at the end of 5 years, any capital gain will not be will not be subjected to tax. Any interest you earn for the 2 to 5 years will not be subjected to. The premium bond sometimes not like a lottery, but you have a number, and every once in a while there might be prizes for the numbers. I guess it's a bit like aspirasi or BIBD. When you open a fixed deposit or savings account, you're entitled or you're eligible to a lucky draw of 2,500, 25,000, a grand prize of 250,000. Yeah. Premium bonds is similar in that kind of scheme, that any money you win will not be subjected to tax. Yeah. I don't know in Brunei personal income tax, if you win money like that, like aspirasi, I think it might be taxable because it will be included as part of your income. Yeah, so then you'll be subject to tax, unless the way that the banks or whoever is giving out this money, they'll say that, okay, all taxes will be paid by the bank. Then whatever you receive, you don't have to worry because the tax has already been deducted. Yeah? Now, child benefit, of course, in the UK, if you have children, you're not working, you may get child benefit. And usually, child benefit is paid to people responsible for caring for at least one child, and it's usually exempted from income tax. Yeah, so any income that you receive as a carer for taking care of children will be exempted from tax. Okay, if you look at the tax table just now, you will see that there's there's here qualifying interest. Yeah, and what is qualifying interest? Qualifying interest is given tax relief by being deducted from the total income when you compute your net income. Yeah? These are loans for the following purposes. So you can only get qualifying interest deduction if you do the following. Loan to buy plants and machineries for partnership use. Yeah, so you have a partnership, you want to expand your business, you need to buy plant, equipment, machineries, whatever it is. The loan that you take up and the interest that has been charged on this loan can be used to be deducted against your income. Loans to buy plants and machinery for employment use. Similarly, you run a one-person show. You buy your kitchen utensils, you buy your sewing equipment, and you take a loan for your own use. Then the interest on that can be used to be deducted against your income. Now, loans to buy interest in an employee-controlled company. There are some companies which are controlled by employees because of a management buyout. Then you take a loan and you buy shares in this company. Then loans on interest, the interest on the loans that you have paid just to buy shares in this company will also be deducted against your taxable income. When you're offered a partnership, sometimes you need to contribute capital to the partnership. Yeah, I mean, like KPMG, when I became a partner, you don't become a partner for free. Yeah, you have to contribute something to the capital. Of course, in Brunei, because the partnership is small, so the amount of capital contribution is not so huge. But in other countries, it could be a few $100,000, it could be up to $1 million just to be a partner. Yeah, so you need to put $1 million into the partnership. And not everybody has got $1 million, so they borrow $1 million from the bank to put it into the partnership as capital, and any interest that you pay on this loan will be available to be deducted against your trading income. Loan to invest in a cooperative, so if you borrow money to invest in a cooperative or koperasi, as it is known here, the interest can be deducted against your taxable income. Yeah, so the relief is given by deducting the interest from the total income to calculate net income for the tax year in which the interest is paid. Personal allowance. What is personal allowance? In most countries, I think in every country, not where income tax has been imposed, every individual is entitled to a personal allowance. So what are personal allowances? Personal allowances are given by the government because there's a recognition that when you receive salaries, you need to use some of your money for basic living, buying food, clothes, child welfare, education, whatever it is. Yeah. So all individuals are entitled to a personal allowance. Personal allowance will be on page 493 of your tax table, yeah, which is £11,850. So when you calculate the net income after the qualifying interest deduction, you are entitled here to personal allowance. Yeah, the personal allowance will reduce your net income And the figure that results from the deduction of your net income and your personal allowance will be your taxable income. Okay, so all this qualifying interest, personal allowances reduces your taxable income. Okay, when your taxable income is reduced, your tax liability also reduces. Yeah, but there's certain things that you need to be aware about personal allowances in the UK. Yeah, it is deducted from net income, first against non-savings income, then against savings income, and lastly against dividend income. So any of the deduction will be from left to right. Yeah, from non-savings to savings to dividends income. As per the tax tables, as I mentioned earlier, all individuals are entitled to a personal allowance of £11,850. You're lucky because in the past, there are different personal allowances that you need to have been made aware of. Apart from this single person personal allowance, marriage allowance, age allowance, that means if you're more than 70 years old, there's a different calculation of the allowance, and so on and so forth. Yeah? So now you only have one figure. So in the exam, you only needed to remember one figure, 11850. But in the past, you needed to remember, I think, 3 or 4 different figures. Yeah? And then you need to do another calculation for age allowance, and also another calculation for the threshold. Now in the UK, where an individual's adjusted income exceeds £100,000, yeah, the personal allowance will be reduced by £1 for every £2 that you have earned above 100,000. Yeah, and this will be the adjusted net income until your personal allowance becomes 0. Okay, so anything above 100,000, you reduce your personal allowance by 50% of what has exceeded 100,000 until the personal allowance comes to 0. You don't really have to do the calculation, it's already given to you in the tax table. So in this case, where someone's adjusted net income is in excess of 123,700, yeah, 123,700 or more, he or she will not be entitled to any personal allowance. Okay, so in the tax computation under personal allowance, where you see that the adjusted net income is more than £123,700, personal allowance will be 0. You need to put a note of no personal allowance is available and it is above the what's the word that's used here in the text? It is above the personal allowance threshold. Yeah. So again, one of the most common exam mistakes that students make is they do not adjust the personal allowance figure. And it's already given in the text table. And if you look at page 493, it says, where adjusted net income is 123,700 or more, personal allowance is reduced to 0. Yeah. So those are very common exam mistakes that is done, where people forget to adjust the personal allowance. Right. Although this is an academic exercise, but generally what you need to do is, and this is not only for personal income tax, they will be applicable to capital allowances, will be applicable to calculating capital gains, profit chargeable to corporation tax for companies and so on. Yeah, there's a set steps that you tend to follow when computing your tax liability. Okay, so in this case, for this particular chapter on personal income tax, to compute tax liability and income tax payable, these are the 8 steps, which is already in the textbook anyway, so you can read it. The first step is to prepare the 3 columns. So any tax problem, tax computations that you're faced with, you need to do the pro forma, the columns. You need to know what the headings are, what is on the top, what is on the left side, or maybe what's on the right side. Yeah. When we do personal partnership tax, I'll tell you the slight difference in the format for partnership tax. Okay. So again, when you look at the tax tables, you deal with your non-savings income first, then you deal with your savings income, and then your dividend income. Add the whole amount up together. And then once tax is computed, you deduct any available tax reducers. Calculate your tax benefit, tax charge pension, and all the other allowances. And this will give rise to your tax liability. Let's see what example there's in the textbook. If you look at page 34, yeah, there's an example here. I hope everybody's got a textbook. For those who hasn't, or those who don't have access to a textbook, just have to bear with me. Yeah. And in this question, and usually in exam questions, it will be quite similar. Okay, here Michael lives in Northern Islands, has employment income of 59650, and then in brackets it says PAYE deducted 12,220. So it's already stated blindly, yeah, clearly, not blindly, sorry, clearly that PAYE of 12,220 has already been deducted. Then you have your bank interest, your dividends of so much, and he has qualifying interest of 3,000. How much income tax is payable by Michael in 2018-19? So again, if you look at the answers, all you need to do is to do the column, and all the figures just comes in to the computation. Yeah? Just comes into the, make sure it comes into the right column. So his employment income is under non-savings, his bank interest is savings income, his dividend is under dividend income, you have your total income, he's got qualifying interest of 3,000, personal allowance 11,000, then you get your taxable income. So that taxable income is exactly as per the tables that I gave you. And then you calculate his income tax. I think just follow it through each line by looking at the tax tables. Then you have your tax liability of 13,332. Actually, this question always comes up in the exam. Yeah. So you got your tax liability of 1332. The question is, what is the tax payable? You've already suffered PAYE of 12,220. So 1332 minus what's already suffered, 12,220, gives rise to a tax payable of 1,112. Okay. So when you look at your tax computation, that's what you need to do. Do all the calculation, check to see whether any tax has already been deducted at source. In this case, it's already crystal clear. It's already given to you. Yeah, PAYE is 12,220 has already been deducted. So when you calculate your tax payable, yeah, which is different from tax liability. Tax liability is what your liability is. In this case, it's 13,332. You've already suffered 12,220. So the balance is what is payable. So when you do your tax computations at the end of the year, so in this case, if I was still working in the UK, yes, KPMG has already deducted my tax from my salaries, but I may have savings income and dividend incomes. Yeah. So if I do have that, then I have to resubmit my tax computations based on the other income that I receive and do the balancing after that. Yeah. Okay. What I've mentioned in this slide is basically, in order for you to better understand how the tax computations work, okay. So if you just go through all the way from the start, say from page, I think actually from page 28 onwards, yeah. Page 28 onwards, there are various examples. Examples which includes non-savings income, savings income, and dividends. Examples which only include savings income or non-savings income, and examples that include non-savings income only. In the past, there used to be an example on dividend income only, but somehow this textbook somehow doesn't have that. Yeah, but it doesn't matter. But if you go through from page 28 to page 32, there will be different work examples that you should be able to follow through. Yeah. And to me, it gives you a better understanding as well when to use the basic rate of 20%, when to use a higher rate and additional rate of 45%. And also, you'll be able to understand how personal allowances is applicable and when personal allowance is not applicable, namely when net income is more than £123,700. Yeah. So just go through all this, because I think it's important that you just go through it so that you have some working examples of how the tax computations works in practice. You can do it two ways, either just read this or go through the question or write out the answers. If you were to do exams, I'll ask you to write out the answers by hand. Yeah, get used to the habit of doing the 3 columns and then writing down the narratives on the left side so that in your mind you already know how to do the pro forma. I think a lot of computations that you do, whether it's management accounting, financial accounting, if you read the textbook, it'll never click in your head. But when you start writing, like financial reporting, you do your non-current assets, current assets, which is your debtors, cash, accounts receivable, and so on, and your current liability, trade payables, loans, hire purchase, long-term liabilities, you have your net assets, then you have your share capital plus reserve, where both have to balance. Once you write it out by hand, the format sticks in your head, because what's written in your hand goes to your brain, and it's easier to remember. So for a lot of the computational subjects that I lecture, I always like the students to write it out again. Write out the pro forma. When you go to the questions at the back of the textbook, again, if you do the examples, write out the format. So at least it sticks in your mind, in terms of the pro forma and the format itself. Okay. What is employment income? Employment income is generally general earnings are taxed in the year of receipt. So it's in the year that you receive your salaries. This includes both cash earnings and cash equivalent benefits. I will go through some of the benefits in the further slides. Earnings is defined as any salary, wage, or fees, any gratuities or other profit of incidental benefits obtained by the employee, if it is money or money's worth. So sometimes I may get a benefit which is not cash, but I need to look what the cash equivalent is. So there will be about 5 or 6 examples going through. So the general definition of the date of receipt is either the earlier of the time payment is made or the time entitlement to payment arises. Am I entitled to receive my salary today? But if by right I should be receiving it at the end of the month. So the right is to receive at the end of the month. But if I don't receive it, I still, till a few days later, I still have to consider it as my income on an accrual basis. So total taxable earnings less total deductions will be the next slide. Will be the net taxable earnings for the tax year. Deductions cannot create a loss. So for personal income tax, all the deductions that you have cannot move your employment income to a loss, but it can reduce your next taxable earning to nil. Now the most important underlying principle, whether it's personal income tax or corporation tax, is the general rule is that expenses can only be deducted from earnings if they are incurred wholly, exclusively, and necessarily in performing the duties of employment. It is a very important underlying principle. So if you look at companies, then the general rule is that the expenses can only be deducted from earnings if they are incurred wholly, exclusively, and necessarily in the performing of the business of the company. So for companies, it's company. For individuals, it's performing the duties of employment. So what are some of the examples? Expenses specifically deductible against earnings are insurance premiums to cover directors' and employees' liabilities. So you take a an insurance policy to cover your liability. Here we call it, what do you call it? Maybe third party, public liability, whatever it is. Yeah. So those premiums are permitted to be deducted against your earnings. Subscription to relevant professional bodies. So for me, because I'm a member of one of the professional accounting institute, any subscription that I make to the accounting professional body, yeah, in the UK will be an allowable deduction. If I make payment to maybe a golf club, yeah, a subscription to say here Pantai Mintiri, that is not essentially part of holding exclusive incurred for the purpose of my business, although people say that playing golf is important for business. But from a taxman point of view, any subscription to a recreational club for sports will not be a tax deduction. Yeah. Now, what's qualifying travel expenses? These are costs that the employee incurs traveling in the performance of his duties to and from a place attended in the performance of his duty. So, for example, in the UK, when I used to do audits, we used to travel a lot. So I used to buy an underground pass or one of these card, yeah, which allows you to travel on the underground and on trains. And when I travel, I also can claim the expenses, but they don't. Yeah, I claim the expenses, yeah, and then that's deducted against my salary. But it's only important because for audit, when you do audits, you tend to spend most of your time auditing outside the office. So you have to travel. Yeah, auditing is a profession where you must travel. Hence, you have to incur an expense. If I travel from my house to the office, that is not a deductible travel expense because I am going to the office to perform my duties. But if I have to, in order to perform my duty from the office, is I need to go to another premises, to the client's premises, then that is a deductible expense. Yeah. Employers may pay a mileage allowance to employees who use their own car. So in London, yeah, sometimes we are given a car. We get allowances for using of car. I think if you look at the textbook, there are different examples about different cars, the different allowances and so on. Yeah. So there are payments up to a statutory limit that are tax-free and in excess are taxable. Contributions to a registered occupational pension scheme. So of course, any contribution that you make to TAP, SCP in Brunei will be a tax deductible deduction. Now, some companies may have their own pension scheme on top of SCP and TAP, yeah, like Brunei Shell, some of the banks, because in the past, when they had their pension scheme in place, the amount of contribution is certainly more than 5%, up to 10 to 15%. Then when TAP came out, instead of contributing 10% to the company's contribution scheme, they contribute 5% to TAP and the balance to the company's contribution scheme. Yeah, because the scheme was already in place before the government's pension scheme, any contribution to this so-called occupational pension scheme or company scheme will be considered as an allowable deduction. Yeah, but if you set up the pension scheme after TAP, then you need to apply to the tax department, assuming that Brunei has a tax system. Then you need to apply to the tax department for this company's pension scheme to be approved. Yeah. So any deduction then made to this company scheme will be a tax deduction. If it's not approved, then anything that has been deducted to this scheme will not be allowable. So you cannot reduce your tax liability by your contributions. Yeah. Payments to charity under a payroll deduction scheme, depending on the charity as well. In Brunei, again, just to give you an example, the government has recognized a number of institutions as a charitable organization for deduction of salaries. So some governments do deduct part of their salary, even now, yeah, and it's paid through TAPIS, and it can be either to PABDA, Kacha, Pusaisan. Joint Association, Smarter, and so on. Yeah. So there's a list of charitable organizations recognized by the Brunei government. And because I'm the treasurer and PAPDA and also the president of Koperasi PAPDA, we do see in our bank statements certain amount of money being transferred every month through TAFIS, which are payroll deductions of some of the people in government that have decided to donate part of their salary to the different charitable organizations. So if Brunei had a personal income tax system, all these deductions that the government servants have done or individuals have done to this charity can be considered as an allowable deduction. Yeah. So again, any deduction must be government sanctioned, must be approved by the government. If it's a deduction, so for example, I made a deduction every month to Liverpool Football Club. Yeah, it's a donation to the club. The government say, Liverpool is a supporters club that has got nothing to do with your business, so it is not a tax deductible expense. Yeah. So the test case is, has the expense been wholly, exclusively incurred for the purpose of my employment or my business? Yeah. I think we're near the end already. I think that's the end probably. Okay. So next week's lecture. Okay. My lectures, as I said, will not be long because when you're talking about a computational subject, theoretically it's going to be a bit boring. So I only want to keep it to 1 hour, if that's okay with you. Next week, you will see a different background. Inshallah, on Saturday, I'm flying to London. I've been approved by the Prime Minister's office to be able to leave the country. I just got my COVID test now and it's negative. So I'm a negative person, which is positive. Yeah, it's good. So so London time, my lectures will be 4. So if you don't mind, my lecture next week will be at 12:30, which is 4:30 in the morning, UK time. Yeah. Okay. So, and again, so the topic that I'll cover next week will be taxable and exempted benefit, which is slightly different, benefits, and property income. Since these two topics are quite short, so I just want to do 45 minutes one and 15 minutes the other. And it will be the same. Then following week, the topic will be capital allowances. Yeah, but that one will just be a topic on its own. But again, it's a very computational subject. So, it might not even take 1 hour, maybe 45 minutes. So most of my lectures, if you're in agreement, will only be 1 hour. Yeah. As I said, you probably spend most of your time doing the computation. Okay, any questions? I know it's very quiet out there. I hope you're not cooking your lunch while you're talking, some of you.
No question, sir.
No questions?
No
questions.
Nothing. How are you all coping at home?
Screen fatigue, sir.
Screen fatigue, yeah, I could imagine so. Imagine young kids, my granddaughter, 4 years old, wouldn't have to, one whole morning on the screen. It's not good, I think, for young people to be zooming every day at home. And I find that people are just totally reliant on the screen now, yeah, and internet. A lot of the social contact. So my daughter spent 1.5 years from her second semester of first year to the end of her second year doing her lectures from home. But now she's flying back to the UK to do her final year face-to-face, because I told her, I don't care, no matter what, you have to go back and have a proper university life. I cannot imagine someone doing 3 years university without even being in a classroom. That to me is not a proper education. Yeah. I think like for you all as well. I mean, inshallah, hopefully by the end of, when we're still getting hundreds. When I spoke to you last week and this week, every day more than 100 cases. But the only positive thing is the recoveries are more than the number of cases. So we can see the total number of cases reducing. Hopefully it will reduce more. What's the qualification to work? Qualification to work for me? At the moment, I do nothing. And that's purposely done. I have not kept an audit license because I do not feel that I needed to be an auditor after 36 years. And being an auditor has a lot of other implications for me. I mean, at my age, I'm looking to do other things, yeah? Independent directorship, general consulting. So by not keeping my audit license, I can maintain my independence. And now that I've been retired more than 1 year, it's already more than 1 year cooling off period. I have been invited to be independent directors, waiting for approval. So once it's approved, I will tell you which companies that have approached me. Yeah, and also even like taxation as an independent director, I can utilize my skills and knowledge on auditing, so the internal audit process, my knowledge on taxation from a company's point of view, whether they have done proper tax compliance. Actually, in today's BBC News, Amazon has paid, they have a turnover of £20 billion. Because of COVID, their income has increased from 12 billion to 20 billion. A lot of people are ordering online, so their business has grown, and they've employed additional 15,000 more people during the last year. And they've paid £500 million in tax, plus 1.1 billion pounds in indirect taxes, which is VAT. So they have paid about I think what they stated, they've paid a total of 1.8 billion in tax last year, which is 1.8 divided by 20 is just under 20%. Yeah. So even that, the opposition government is saying that they're not paying enough tax. Yeah, they should be paying more. Because they argue it's not about the tax, but it's about the working condition, people working long hours, and the health and safety issues. So sometimes, as independent directors of companies, we need to look at a lot of other issues apart from being good corporate citizens, good paying proper tax. So I think I was asked, I had to do a survey yesterday, I think, about corporate social responsibilities, about sustainability, about the green environment. Yeah. Sustainable development goals. Sometimes in order to comply with a lot of this, it also entails a lot of costs. Yeah. So any more questions? Anything? Inshallah, if my company grows, because my Shazali partners, I've been asked to train about 100 locals to do accountancy work, bookkeeping. Although the government said they may subsidize, but when you start even with 20 first and grow up to 100, you still need an office, you need admin staff, you need to have the equipment, laptops, everything else for people to work. I was not willing to make that investment, maybe 50,000 just to start that business, and then government to say that they may help, but what happens if they don't help? Then I'm stuck with 100 people, yeah? And then doing bookkeeping does not pay much. You can charge $100, $150 per company if they want your service. But if your proposal to impose personal income tax is imposed by government, then 100 people is probably not enough to go around to help do tax costs, do VAT returns, and everything else. Yeah, so there is an opportunity there. Yeah. So that's it. Anything else? It's already 1 hour. I think that's about it. Yeah. So, Han, you like accounting, is it? How many of you planning to do the ACCA after this? My advice is, what you can do is, that the government has launched SPIN, yeah, studying in professional institution. They give scholarship up to 60 people every 6 months. Yeah, it's every 6 months. It is the certificate in accounting, foundation in accounting, and ACCA. So in your case, once you get your degree, apply straight away. They will pay, if you're successful, to complete your professional course right up to your full ACCA certification. Yeah? Up to, I forgot already, is it 12,000 or 18,000 Brunei dollars is the value of the scholarship. Yeah. So it's something that I think with COVID, actually COVID probably is a good opportunity then for you to increase your professional qualification. Yeah. Masih muda lah, semua orang muda balik. Yeah. You're never too old to learn. Yeah. So I'm still learning. I'm still learning how to do PowerPoint. Look at my PowerPoint; it's so boring. I don't even know how to do all these tables. Struggle on my own, but slowly getting better. Yeah. ACCA, you don't need to work. You can do it full-time, part-time, anytime, anywhere. But obviously, when you pass all your professional exams, you're an affiliate member of ACCA. It's only once you get your 3 years work experience, then you become a full associate ACCA member. So yes, when you're studying, you don't need to be working, but it is preferable if you can do work and study. Yeah? So when you work and study, the work experience that you gain is considered as sufficient for you to get your full associate membership. Yep, there are night classes, correct. But I think what we're trying to do, the Brunei Institute of CPA, we're working with one institution in Malaysia, and basically it's going to be all totally online. You will have virtual classes, online classes, resources to the lecturers. And I think the arrangement that we are coming up with will benefit everyone because, one, we realize in Brunei we don't have sufficient, I mean, I don't want to teach at night, you know, the lecturing time is 7 to 9, and to me, you know, malam is my precious time. So we will be linking up with a very well-established accounting provider in Malaysia. And once you're registered, you will get access to a lot of material, a lot of resources. Yeah, and if you are working, you can do that at night. But I think the way that we work is lectures are not every day anyway for professional level. Yeah? So I think you can time it in such a way that to suit your own timetable as well. Yeah. Yeah, if you work for government, now you only work till 2 o'clock anyway, so you can study after that. Yeah. Okay. Anything else? So please try and just go through 1 or 2 examples. Don't go through everyone, just so that you can get a feel, an idea as to what a computation looks like. Yeah? To be honest, I don't know how to, I'm so useless with doing it on PowerPoint to do all these examples, zooming. So you just, zooming means, you know, people, you know, how you do animation and all that. Yeah? Maybe I'll get my daughter in the UK to teach me that. She's more willing to teach me than my kids in Brunei. Yeah. Okay. Okay. Anything else? If nothing, see you next week. See your initials next week, rather. Not it. Yeah. Okay. So you're okay with just 1 hour lecture?
Okay,
Yes,
sir.
okay, sir.
Okay, yeah, I think it's better rather than talking to us. You probably listen for 2 hours anyway. Yeah, correct. Yeah. Sometimes you never listen for 2 hours. Yeah. You listen for half an hour now. I know it's not easy. Okay. Okay then. So enjoy your weekend. I'll see you next week. Stay safe. Stay insane. Stay not insane. Stay sane and safe. Yeah. Okay. Thank you. Thank you.
Thank you, sir. Stay safe.
When I'm in UK, I'll try and see whether there are any useful things that I can share with you on the
Thank you, sir.
ACCA taxation. Yeah? I will look for the new taxation syllabus and see whether anything relevant. Yeah, for you all.
Okay.
Okay then. Stay cool. See you guys.
Bye, sir. Assalamualaikum.
Waalaikumsalam. Bye.